All right, everyone. Welcome back to Money in the Tank, episode 32. It's just Braddles and I today because Jolie has come down with a big case of the man flu, I believe. So
rest up, Jolie. Rest up.
Yeah, the big dog's out of action for a week. But as per our new schedule, which Brad is holding us to, we are doing one recording a week.
Rain, and we're going to get better at uploading as well. We're going to get better at uploading.
Oh, man.
Over the course of the next 3 months, we've got a lot of good things in store for bringing a bit more structure and hopefully delivering content in a more efficient manner.
Mate, there's Money in the Tank games across the board in the future.
Games. Everywhere.
So, we have to do our introduction because you got a special one this week. I don't know if you've got it handy, but I am Arnie, tax professional, and you are...
I'm Brad Generalist, but I have an alter ego, which will be coming.
Oh, we're saving it. All right.
Yeah, we're saving the hat, mate. Saving the expensive hat for later.
Well, so today, you and me, we're going to follow our normal routine. So you've got a Rivkin's quote in Jolie's absence, and then we're going to talk about the Australian election briefly, then talk about our investing strategy at the moment, like how we're thinking about the market, crypto roundup, and then financial news, and then we're going to head into our special segment. So that's basically the new sort of format we're going to stick to, right?
It is a news, yeah. So we're just thinking that, instead of probably hour-long podcasts, we're going to try and, on a weekly basis, kind of focus on one or two kind of major issues. Obviously, the election being the one in the past week that probably is going to affect the things the most.
It's a pretty amazing, massive issue.
Yeah, touch on crypto. Do a bit of a financial turbo update from what's going on around the world. We've got a secret kind of new one where my alter ego will come in, and then a bit of 50-50. So hopefully the new format's good. If you've got any kind of comments or feedback, throw it down in the comments on whatever platform you view it on. And without further ado.
Yeah, well, I might just mention them at the front and center just so we can get in there. So at Money in the Tank on YouTube, Twitter, Facebook, Instagram, and send us comments or 50-50 suggestions or anything you want us to talk about.
Indeed.
Well, without further ado, no.
Rivkin,
mate.
sorry.
Yeah, which one is
my bad
for us?
Just jumping into the elections. Excited.
Yeah, so have you got one, or am I getting one?
I've got one.
Yeah, go on. Hit me up with
if you wish to be successful in life, choose an appropriate mentor.
That's a great Rivkin's rules quote.
I'm going to say, like, during my career, especially early on in my career, but even later on in the startup world, mentors, they just help you jump ahead, I would say, from whatever you're doing yourself. Not make mistakes, be aware of what's out there, execute on things you didn't even realize were around you. For the man Rivkin, that one was pretty rock solid compared to some of his other quotes.
I also feel like it applies in any aspect in life. Like,
career. Well.
Yeah. Just mentors, get them where you can. It doesn't have to be a formal mentor.
And that's the thing, Arne. It doesn't need to be a formal mentor, mate. It's just basically, whether it's you want to learn how to swim better, you've got some relationship stuff, you got whatever. There's always someone in your life that can probably...
like you've been a mentor to me. I hope I've been one to you, and so with all of our friends and like colleagues and stuff. So anyway, that's a good one.
Since 13, mate. Since 13. So
that's a good one from Rivkin.
Not bad, Rivkin.
Well, let's jump in.
Election.
Yeah,
election.
Jump in. You go first, and we'll have a think about. Like, I know we've been reading a few news articles about how we think a Labor government will shape the future for Australians. So yeah, what have you been thinking?
Also read, obviously, pre-voting policy documents. So look, I think we're still figuring out. I think as of yesterday afternoon, I haven't updated myself as of this morning, but we're still determining whether it's going to be a minority or majority.
Yeah,
kind of Labor-led government. But I think with the Greens and with the independents, the Teals, and this looks like it's going to be a 6 independent. The focus is not going to be on necessarily anything game-changing like financial deregulation or depegging of the Australian dollar or stuff like that. It's going to be definitely focused on, I'd say, like 2 things. One is supply chain. Fixing, I guess, our supply chain issues, taking the lessons from kind of globalization and let's just say pre-COVID, pre-Russian Ukraine, around kind of revitalising the industrial industry here. And then obviously there's the increase of 5.1%. I think they've gone to Fair Work yesterday for the minimum wage to try and keep minimum wage in line with inflation and kind of start to increase. I think the figures were about, growth under Labor over that decade was like 3.1% average, and then under Coalition was about 1.7. So wages have kind of fallen.
They've stagnated for a while.
And so I guess the big one for me in terms of kind of for the tankers is there's a $15 billion reconstruction, they're calling it, fund, with hopefully another 15 to 30 billion coming in with private government partnerships. It's going to be kind of focused on like providing loans, guarantees and equity to support projects to drive kind of regional development, renewables, investing in our national kind of sovereign capability, going back to that kind of protecting nation and diversifying our economy. And I think that there is going to be the big one, because targeting mining improvements, new minerals, the ability to process minerals here, rare earths, medical science, defense, agri.
Better infrastructure and more investment in those things that'll like solidify us as a nation and into the future.
Exactly. And I think it's around kind of unlocking, because there's big investments coming forward, even NBN, and getting that to where it needs to be. And so I would say there's probably been a lack, this is just personal opinion. I think there's been a lack in strategic infrastructure projects and support in Australia over the last decade. We had the coalition come in and change the mix-up of NBN. And the final cost ended up still being
ridiculous.
Plus. And we've got this kind of mixy bag, and we can thank Turnbull for that one. And then just in our overall kind of industrialization, I wouldn't say that's on the coalition in terms of knowing that like COVID and this kind of world's coming up. It kind of snuck up on the whole world, really. There's people obviously calling out the dynamic nature of what's coming up and the rest of it, but really any country should be investing in its infrastructure, because that's where you get your ROI.
For sure.
And productivity benefits. So that's my take on it.
You've hit the good macro. You've hit the good macro issues there, mate. And I think the platform that I remember both of them running on, aside from climate change, right? And you mentioned that there'll be infrastructure spend in renewables, which we all hope to see. And I know personally, I hope to see a bit of a change in policy around nuclear energy. I hope that investment gets put in that space as well, from an environmental perspective, but from more of a micro perspective about the budget and the tankers and everyday Aussies. I know that the big three issues were childcare, which is one close to my heart.
Which is coming in, obviously.
Well, they all had a policy for it. So did Liberal, right? But say it's a Labor majority government and they can do what they want to do straight away, which I actually think that even if they have to deal with the crossbench, they'll be sympathetic to these issues. But I think
your independents, Teals, 5 out of the possible 6 independents are very intelligent females from kind of capital cities who are career driven and understand kind of this.
Well, the main issues in this election were, again, so childcare, health, and housing, aside from climate change, which is the number one issue, right? But if you think about those 3 issues across Liberal, Labor, Independents, everyone's going to try and do something to ease the cost of living in those areas. And I know that the Labor government has said on those 3 issues, I think with the childcare one, they were talking about raising the subsidy up to 90%. So I'm 100% in support of that policy, even though it's obviously going to cost the government where they're going to get the dollars from. Healthcare, I know they said that on the pharmaceutical benefits scheme, they were going to cap the price at $30. Previously, it was $42.50 was the cap of the large, like that's the most you could pay for a script. Now they're going to reduce that, I guess, by $12.50 per script for those really expensive.
Which to everybody, having lived in the US for 5 years and paid $1,100 a month for insurance, I was still for some medication paying up to $300, $400, $500 for some medication. So just kind of how good we've got it here.
we are like, I am very like, not that I can see the pros and cons of both governments, but I feel like when we've got a Labor government, you generally see a strengthening in those social policies, and that's one we can be thankful for. And the last one, which was housing, which they both had very unique takes on, and the Liberals kind of got slammed for this because they were talking about, drawing from super for a deposit, and people were saying, well, that's just dumb because it's inflationary. Like, you're just going to pump the prices up. Labor has a different one, and I'm not sure if it's dumb or smart at the moment, so I'm going to reserve my judgment. But and I've got some notes here, so bear with me while I just read these quickly, Brad. So it's called the Help to Buy scheme. The government will contribute 40% to the cost of a new home and 30% for an existing home. To qualify, individuals have to earn less than $90,000 a year or $120,000 if you're a couple combined. And there would also be a cap on the property's value based on location. So it's still in the early days, and I feel like there's a lot of ambiguity around.
There's a lot of ambiguity there.
Yeah, and also, sorry, they're going to cap it at 10,000 places a year. So it's not open like free for all. Like, once the 10,000 a year are done, if you're eligible, then you got to wait till next year or get yourself on a list. So
I think the cap's the key.
Yeah.
Because I'm actually not. This is just, again, personal opinion. And everyone's screaming out there going, okay, well, you've got a house and the rest of it. Actually, I don't. I've never actually purchased my own property. And I mean, living one with my wife, but it was hers before I came along. So I could still go out there and get my first home buyers. But anything that's inflationary towards housing, I understand the affordability issue. But I'm a big fan of markets kind of coming along and, playing their part in that. And we've had never-ending growth in this area. And I think that anything that comes along that is going to be inflationary. Now, we're talking about $90,000 as an individual, 120 as a couple. Yeah. So we're probably talking, if you look at average wages or median wage in Australia at the moment, I think... let's have a look really, really quickly before I
think the average is around, like, last time I checked, I think it was around 85, but that's a lot higher than the median. I think the median was like 55.
Yeah, that's because it's the difference, right? So the average, there you go. Average selling in Australia, 105,000 for public and 94,000 for private. But if you throw the word median in there, yeah, which is really what we should be going towards. What are we looking at? You'd think that it would just show up really, really quickly.
You think it will?
Medium. So I think medium's around 62.
Yeah, so that's a huge discrepancy between the average. Obviously, the top end's dragging it up a lot. But
the medium, even the medium, if you have two people on the medium wage, you're roughly going to be coming in at that 120. It's a lot of. I know it's capped at 10,000, which is probably the key factor. But there could be some inflationary pressure there, which then again only kind of refuels this, because if this scheme ends up getting kind of put to the side or whatever it may be in years to come, then you're just going to have a new generation of people with exactly the same problems trying to get into the housing market. So that's personal opinion. I don't own any property, so therefore I can be a little bit more skeptic on prices going down.
I'm a skeptic of this policy. I can see merit in it. It kind of reminds me of HEX. Like, I think it could be a good thing, but I also wonder about the implications of the government owning 40% of your property, and what happens if the people, for whatever reason, can't service it. Then government's just owning all this property. What do they do with it? How do they dispose of it? So anyway, it's like something we can put on the back burner. Interesting policy to watch, but that's one that will impact everyday Australians. And the final one I wanted to mention was Labor has committed to proceeding with the tax cuts that were put in place by the Liberal government. So that will mean Aussies earning between $40,000 and $200,000 a year are going to face the same marginal tax rate of 30%. So,
just really, really quickly for the tankers, if you want to go and we might do one of the videos on this one, actually, Arnie, that we're talking about, because we are looking to put out some kind of more explanatory topics or little quick bits that we think are interesting.
Yeah.
If you want to go and if anybody's interested out there about how to possibly what are options in solving the housing crisis and ensuring those that want a house can get a house, just a little bit above Australia is a place called Singapore. I think they're up to about 7 million people now, and have a look into their HBS system, because it's probably the world's most successful public housing schemes out there. So have a look at it. Might do a topic on it.
Well, I reckon that's pretty good wrap up of the election, and I guess as a nice little segue, we can talk about where our outlook is for investment over the next, I don't know, 6 to 12 to 18 months in Australia.
Let's
and
keep
also,
let's keep it 6 to 12.
yeah, 6 to 12.
18's getting a little bit out there.
I mean, I always try and look with a view for
So do
like a
I.
very
I do
long-term.
5-10 years because I'm a long-term investor, but yeah.
I know things are subject to change, so and it's all general in nature. This is not financial advice, but it's
we will say that about 100 times during this podcast.
It's become a bit of a joke at this point in general in nature, but
general nature, blah, blah, blah.
It's a good segue because also obviously, and this is impossible to tell which way it's going to go, but the stock market in Australia and wherever else is affected by the election. So we can sort of have a think about what we're thinking about doing, and how are you placed? Like, what are your thoughts at the moment, Brad, on the market, and how are you choosing to invest, or are you sitting in cash? What are you doing?
What am I doing? Look, so for the takes, I think you might, like last week or the week before, I think I may have kind of mentioned. Actually, before I dive in, can I get the screen? I just want to share one thing quickly.
I'll make you the host.
Thank you, sir.
Go ahead, my friend.
Thank you. So I just got, for those that are actually visually watching us, unfortunately, those on kind of Spotify and stuff, I'll try and read it out.
No, Spotify's video now, mate. We're all good to go.
Oof. Joe Rogan bringing video to Spotify. Here are the All Ords performance in lead up to and after.
Can you zoom in a tiny bit on that, mate?
Yeah, I can zoom in a bit more. Oof.
Good man. That's nice.
That's that. Not bad. Better than us trying to do pitches the other week. Got it all sorted this time.
Gains across the pond.
Gains every week. And so, look, you're looking at, let's just go back to 2001. Coalition wins 3.4% 5 weeks up to election, and 3 months after in the honeymoon period, 5.4%. 2004 coalition again, 3.1, 9.9 increase. ALP comes in. I mean, 2007 wasn't
GFC, yeah.
2007, not the nicest time. Minus 1.8 and then minus 11.7. LP comes in again, 0.6 and 5.7, and then coalition, and between 0.9 and minus 2.6 and 1.8, and then between minus 1 and 0.4. So, look, I mean, these generally speaking, depending on what's going on in the world, obviously plays always into these things. But there's always, I mean, the average that I kind of read was around 4.1% in the 3 months following an election due to kind of a bit of a golden haze. But my own kind of, because we have got world events, and I'm a big world event kind of geopolitical economic person. Spend way too much time probably putting my head into that stuff. But look, I divested probably 80 to 90% of my portfolio while I was in Malibu about 3 weeks ago, as I was driving in a car with a friend over there and along the Pacific Coast Highway, and he was asking me, what should he be doing at the moment? And I gave him some advice, and then the next day we're driving on the same road, and I went, hey, if I'm saying that to you, why don't I do it? Do I believe in my own kind of theories? And look, where I'm at the moment is I think we are in a time of multiple crises.
Yeah.
So we've got the food crisis. We've got
supply chain
crisis, inflation crisis, we've got geopolitical crisis, we've got globalization crisis.
Got literal war on the
we've got globalization crisis of supply shocks and the rest of it. There's a number of technologies replacing humans. We've got labor shortages as well, like around people. 1/4 of the American workforce, I heard the stat yesterday, quit work during COVID. And at the moment, like Starbucks, for instance, is running at 50% of what their workforce should be in the US, even though they've got $15 minimum wage. So at the moment, I think there's a whole lot of crises. And I think, if I was investing, I also like to kind of invest at not times of everything's perfect and rosy as well. But I think there's so much uncertainty in the future, and I know the growth stocks have come off, obviously being in that world due to kind of interest rates going up, and we covered that on the last podcast. But at the moment, I know that inflation's there. I'm watching inflation because obviously if inflation just keeps going and going and going and going, I've probably got to look at some alternative investments, whether it's back into crypto, whether it's gold, whether it's, some defensive stocks, whatever it may be. But at this moment, I'm willing to kind of take a bit of a hit on my cash, and I'm sitting on the sidelines for the moment, watching basically where markets and some of these prices go. And I've got kind of like a 3-month cycle that I work on. So I generally look at the end of March. I sat down with another one of our friends, Michael Horman, and kind of look at the next 3 months and go, is it the right time to start dipping my toe into the market?
Yeah.
I'm a big fan of DCAing, not trying to find the bottom because no one knows where the bottom or the top is. But I am a fan of not dumping all my money in thinking, okay, I found the bottom. It's kind of like, do I believe that these are right variables there?
Yeah.
And so over the next 3 months, coming up to the end of June, I'm just sitting pretty, just like this, with my money on the side, and I'm happy to take a bit of a hit.
So give me a percentage. Like, what are you invested percentage wise, and what are you waiting percentage wise? Like how much?
Yeah, so at the moment, I've only probably got 10-15% of my money in the markets.
Okay.
And really, they're so a little bit's in crypto, but not in your traditional crypto assets like Bitcoin or Ethereum. I didn't sell down my stakes in a few things. XRP, because I'm only in there. Look, I'm a gambler. So, the only reason I'm really... General nature. The only reason why I'm in XRP is largely because of the SEC's court case and the risk-weighted return that I believe versus them winning or not. So there's more of like a bet on sports bet than anything else. I've actually bought, the only thing that I've bought actually this quarter more of is Cardano.
Yeah.
Reason being, after Luna failed, I went bullish on Cardano for the reason that they're kind of the opposite of what Luna was, where Luna was like fast, let's get everything done, let's basically take over the whole crypto world, rah, rah, rah.
Yeah.
ADA has been always kind of shunned for being methodical, slow, well thought out, white papers by like very, very smart people in the world for every change they do.
Yeah.
And so they're kind of like your slowly but surely versus kind of the rabbit. And after kind of Luna went down, and look, out of all crypto over the last kind of, let's just say 3 weeks, 4 weeks, ADA's actually performed in the top 10, performed the best. So, I mean, that's it on the crypto side. And then I'm in resource stocks. So I didn't divest. I've divested everything in my equity portfolio, all my growth, everything. Obviously hold private shares in my startup, but which I'm looking to kind of divest probably 10% at the moment on the secondary market, to just create some liquidity and keep more cash on the side. But in the traditional equity markets, divested everything except for some lithium plays, and oil and gas. Because I believe that oil and gas and my lithium and my gold stocks, I should say, are going to probably continue to...
They'll outperform for the next couple
of years. Now, I don't want to put more money into those because I just, again...
The price is up. The price is up on those. Yeah.
The price is up across the board. I mean, oil yesterday was like 110, I think it was, Brent crude. And so I kept those, haven't really added to those positions, just kind of kept them. So that's kind of where I am at the moment. And then kind of will look again in at Q3 or Q1 new financial year, if you want to call it that.
I'll give you my thoughts, and we're obviously we're in different mindsets. I wish I was more in your mindset because I haven't stayed all in fully invested. I'm probably at the moment my percentages are probably 20% in cash, 60% invested in equities, very small amounts in crypto and SHIB still, like
and Luna. You got 12 cents.
And 12 cents of Luna. And I've also got this other part of my portfolio, which is when I say 60% equities, I guess you could call it 80%, but there's this one chunk, my largest holding, which was actually my biggest disappointment of 2021, but it's actually kind of turned into a bit of a boon in 2022 in a way, and I'll explain why. And it's PSTH. So it was the SPAC that I invested in, did a few videos about, in fact, because I was pretty excited when they announced the business combination with Universal Music Group, but that deal got nixed by the SEC, and the timing on that SPAC runs out in July this year or something like that. So it's looking like it's going to dissolve, and I will get the net asset value of the shares back. So
it's like that not forecasted boom, which the underlying assets worth more than the price.
Well, the reason I say it's a boon is it's still a loss for me in terms of, like, I think my cost basis on those shares were it's just under $24, right? Mm-hmm. So, and I'm getting after costs, which I don't know if they're going to cop the costs or they're going to pass it through to the people who hold the shares, but it's a net asset value of $20 a share. So what I mean by it's a boon is I've got an extra pile of cash coming back to me very shortly. And it's basically, and it's doing better than inflation as well. So what I mean is, like, there hasn't been a bigger loss on that net asset value, and cash is just losing value day by day. And as you mentioned, I've got the return of capital tax implications, so that will help with any gains. I did sell some stuff last year, so I'll be able to offset those gains with my losses. But yeah, the final thing I wanted to mention with that is they tried to give rights to a special purpose acquisition rights company through the New York Stock Exchange. That also got nixed, and I think they're still going to try and do it over the counter. Now, over the counter, it's grimy, it's dirty, there's not a lot of value associated with it, but I'm still getting, hopefully, a free option out of this for the next company that they find, that hedge fund finds. So what am I doing with my money at the moment? The only thing I've added to in recent times, and I'll give Hori another shout out, 2 shout outs in the one pod, but Hori and I are invested in this penny stock miner, which is also a bit of a gamble. You might be in it as well, Brad. And they recently did a capital raise. So they issued, the option to buy shares and then oversubscribe, and then also options attached to those shares. So I did subscribe for another.
What was the penny stock miner?
I'll shout it out. General in nature, not financial advice. It's MGT AX, so it's magnetite mining.
I don't know. Like, is it? I know magnetite. So I used to be invested, 10 years in a bunch of African players in magnetite. Is it in Africa?
No, magnetite at the moment.
WA,
South Australia.
Oof.
Yeah, there's a Razorback mine in in South Australia. So that's
very important mineral for those tankers out there. If you want to look into magnetite.
Yeah, so I'm into that one at the moment, and so that's the only thing I've really put money towards because that opportunity popped up. But what am I thinking about getting into? I've got that cash waiting on the side, and if the PSDH money comes back, and like I mentioned in the last pod, I am looking at very safe, secure businesses that have great cash flow and low debt. And the main one that pops out to me is Facebook at the moment. Yeah. And also, if Tesla keeps drilling, I'll probably add to that too. But because that's also a cash flow machine. But
the only thing is, when you're investing in international stocks tankers, remember your FX plays on that. Yeah, so obviously we're sitting, I think 71 cents on the dollar, which is around the long-term average. That if you want to kind of play long-term averages, but just remember to take into a bit of research into FX and where currency markets, because you could theoretically be up 10-20% in a value stock, and then the FX swings 25% the other way, and you can. But hey, look, I play international markets. So.
At the moment, that is the opposite way. Like at the moment, even though the market is broadly tanking overseas in America, if you hold American stocks, the US dollar is up massive against most currencies. So
Australia's gone from 76 to 71. So I mean,
it's offsetting those losses a little bit. So
100%. And I think the only thing I'll touch on there, and I think it's really, really important for tankers to kind of, when you're looking at investment decisions, and not just kind of look at them through the one lens. And that's why, sometimes the professional help out there, the likes of Jolie and the rest of it are like financial planners, is great, is that, I wouldn't have sold down my entire crypto portfolio, for instance, if I didn't have a large gain on selling some secondary last year to fund my lifestyle. And so looking at, I returned to Australia in December, and I looked into the kind of, with my accountant, the Australian laws around assets and crypto, and it was whatever the price was as of December 1st.
Yeah.
And so, that became kind of my cost base. And December 1st, crypto was quite high. Let's just say it was $59,000 Bitcoin.
Yeah.
And so that, taking into account where the market was, allowed me to create a loss that wasn't as big of loss as actually the loss was, due to my actual cost base, but as an Australian tax resident, allowed me. So sometimes take into account kind of, your tax offsets, what other money you've made that year and the rest of it. And that's why we generally see May being a month traditionally on the markets as being a bit of a down month, because a lot of people are just selling off things to kind of balance out their portfolio. So just want to wrap up with that before we kind of move on, Arnie.
Yeah,
anything else on that one?
Well, I was going to say, like, mentioning FX is very important, and I feel like it's just something that investors don't track well. So get yourself a bit of software that can track it. And I use ShareSite, the free version. It's great. So check that out if you need to manage that kind of part of your portfolio, because it is something. It is something that's forgotten, and it's an important part.
I mean, look, FX allowed. We were invested into as US dollars as Hammertech back in 2019.
Yeah.
And me and the CFO. I mean, look, FX is that thing that no one actually knows what's going to happen. So let me just put my hand up first of all.
Same with the markets in general.
But when we took on that money, I at the time believed that US dollars was going to be stronger than AUD, and so we took it on 80% USD, 20% AUD.
Yeah.
And then the Australian dollar dropped down to about 55 cents. I think during 2020 or late 2019, somewhere around there.
During the crash, it was
I think it was 2020, so March or April, I think it was. At that point in time, we decided to move about 80% of our US dollars into Australian dollars.
Smart.
And then appreciate up. And so we inadvertently, by kind of just tracking FX markets and looking at the economic wins and what's coming up and thinking has it been oversold, I think we added about 40%, 30% to
mate, that's a brilliant trade. Just shout out.
Look, it doesn't happen all the time.
Pat yourself on the back, though.
I've got to say, 2 out of 2 felt pretty good. But again, that's what FX is. I mean, again, it's no one, as my mate says in Singapore, who knows a bunch of FX traders. Anybody that tells you they know where it's going, tell them they're dreaming.
So let's do a quick crypto roundup.
Quick roundup. Look, the key things here are there's been I was talking about ADA before, some key kind of things there. It's been adding another 2,000 ADA accounts, active ADA accounts a week during the last 3 months, when a lot of the other crypto have been going backwards. So a lot of kind of people have been going, from probably Luna and stuff into ADA as a safer passage. Its total lot has gone up by about 14% over the last 3 months. They recently did one of the biggest kind of, IPOs, but on the ADA. So ISOs on the actual ADA platform, raised about 110 million US to fund more development in that area. So for me, like on kind of as top 10 coins go, the best performing one just to kind of put out there at the moment in terms of stability. So I'm not talking about, price performance. I'm just talking about like those metrics that actually are meaningful. I think they've got 900. They've released, I think they're up to about 950 now, DApps on there, continually increasing. And so just kind of one out there if you want to do some research on. Again, I'm not general advice. I'm not saying it's not going to moonshine. It's just kind of, if you are looking at crypto and possible good buys at the moment, it's getting about 50 cents US. And I think kind of, again, out of the top 10, that's kind of where I'll be putting my money. Other news, Tether, which has had a very roller coaster history of, it's the biggest stable coin by far. And there's been numerous articles put out over the last kind of 2-3 years about, these SEC lawsuits. There's been, white papers put out against them on Medium. There's been a whole bunch of stuff. Somehow they haven't kind of been taken out yet, but around, because they're not an algorithmic stablecoin. They're actually supposed to be a 1-for-1 backed US dollar or denominated instruments of the US dollar backed 1-to-1 with stablecoin. And so therefore, if you take out 100 billion, you should have 100 billion dollars just sitting there. And supposedly the accountants and audit reports every 3 months, and transparency, they're about as transparent as a brick, in my opinion. They've had over the last week $10 billion of withdrawals.
Wow.
So watch this space, because it's never happened before in their whole entire lifetime of the asset. Has never had anything like, I think the maximum withdrawals, like as in net withdrawals, is about 1 billion. And so there's a lot of I guess interest or testing. Is this going to be the next Luna in terms of people actually testing it? I'll just say watch this space in regards to Tether, because Tether's market cap at the moment, again, I don't want to just spew out something, but let me just get their market
You're trying to spread some FUD right now.
Yeah, no, I don't want to do that. No FUD at all. Market cap is 73 billion, so it's about 3 times what Luna's kind of Terra stablecoin was. I would, just kind of if we're doing a quick crypto roundup, I would just be careful if you're sitting in Tether and maybe move over to the gold standard, in my opinion, which is USDC.
No, mate, everyone's got to move over. General nature, not financial advice, but the safe haven is shit. Shit. No worries.
Not sure about that general advice in nature.
Yeah.
But as we sit here today, US dollars, Bitcoin sitting around 29,805, and personally, I would not be touching anything in that market at the moment. That's
I'm gonna buy the dip on Shib.
Shib to the moon. So that's my quick crypto roundup. Again, I don't want to spend more time on something that there's only a couple of bits of real kind of news. It's basically just been going sideways for a bit. Well, let's go into the roundup of financial news. And
can I jump in with the first one, because it's my favorite? Yeah. So I just want to give a shout out to Twitter user at Botticelli Bimbo Reverse Cowgirl 69 has tweeted out and has gone viral. The strip club is sadly a leading indicator, and I can promise you all we're in a recession.
Hey, look, if any of you saw The Big Short, and remembered when they went to Vegas and the sign that the housing market was overcooked was when you had strip club personnel owning 4 to 5 houses. It was a leading indicator for them, and that was a true leading indicator, right? And so Reverse Cowgirl 69, which has gone viral, stating that discretionary spending has gone down.
She's not getting the dollar bills.
She's not getting those dollar bills. So
making it rain. So it's like, but I thought that was a funny financial news
roundup. Financial. I mean, it's a good roundup, Arnie.
Do you know what though? Like, in all seriousness, it's now making me pay attention to the ticker RICK, RICK, which is like a strip club owner. So just keeping an eye on their price in the near future. But
that's great. I'm actually going to add that to my
have a look.
And everybody, we're not joking.
I'm not joking.
Either.
I'm seriously looking
at I look at probably 10 to 15 different variables, and I'll be adding that to my
it's a good one.
My list of variables. We got EA, Arnie, going out there with a little. Please do. I want some more pan out there. Hopefully, because we obviously had Activision Blizzard selling to Microsoft.
Oh, I don't think that deal. By the way, I don't think that deal will go through at the share price. But yeah.
Again, let's just say it's in the works.
Yeah.
We also have an acquisition more recently, $12.7 billion of Zigna.
Yep.
Getting taken out by, I can't remember the name. It was like Take Two or something like that. Take Two.
Something like that. Take Two. I think that's right.
Take Two. And so,
and Bungie got bought by Sony as well.
There you go. Bungie got took. Well, that was on my list. So there you go. So I know they were out there, and they nearly got a deal done with American media company, but it got shut down in the end. So I think they're asking too much, and they also want the current CEO to stay on. And everyone's kind of like, why are they doing it? The value. I guess they see value there at the moment. So again, watch the space of EA.
Mm-hmm.
Food crisis. So quick update for everyone. Again, I'm not sure if people have been following the food crisis, but you probably have seen it in your bill. Boom. Just want to throw this up, and I'm going to increase the size.
Yeah.
Here is for the year-to-date increase across soybeans, wheat, lumber, cheese, palm oil. I know you can't eat lumber, but cotton and rubber you can't either, so we'll just ignore that. Orange juice, oats. And so you're looking at 70%, 60%, 70%, 40%, 50%, 90%, 30%. This is playing out now, and I just want to kind of throw there to tankers to just probably stay aware of this stuff because this is based on largely last year's crops.
Yeah. Not
this year's crops. So I know that the price, the markets are forward looking. So, they are looking at, for instance, wheat up 77%, or oats up 86%, because these are the kind of the vital food stores around the world. But just kind of be aware on that front. I think it's something that, just track and kind of be aware of. And, that can play out both here in the supermarkets, obviously.
Yeah.
It can provide opportunities.
It's also not a bad idea, like general in nature, but maybe just go get some of those non-perishable items and throw a few in your pantry, because like Brad said, like that's reflecting last year's prices, and it's going to get worse. So
correct. And look, one funny thing was one of the things that have gone down in price is crawfish in China, because they've had a bumper harvest. Just to let you know, it's not all doom and gloom. Bumper harvest. And prices are down by about 40-50%. So it's not all doom and gloom. But look, China has been for the last couple of years storing food.
Yeah.
And people were thinking it's because they were getting ready to invade Taiwan and the rest of it. Might just talk to change over the last couple of weeks. Maybe they've just kind of seen the writing on the wall around supply chain, since they're basically the world's biggest exporter, and they have a big population to feed. So kind of watch this space. But I don't have anything else.
Well, there's one more thing I want to mention, which was that you and I were discussing this during the week, that smartphone sales in China down 30% year over year.
Boom. Yeah, that's right.
And in particular, I think Apple, in terms of the lockdowns, has been hit pretty hard with their production. So interesting to see what happens in that space. And you made a funny throwaway comment, like time to get those spares out of the bottom drawer. Could be, the second-hand phone market could be going gangbusters soon, and who knows?
It's so true. Oh, geez.
Well, the last thing we're going to talk about, if you want to touch on it briefly, I don't know if you want to do it this one, or because we did say last week we'd talk about the construction thing with Metricon.
Oh yeah, look, I've actually got some quick notes on the Metricon one. So look, the nothing concrete has come out since, right? There's a lot of he say, she say, they say out there at the moment. They do have 4,000 properties on construction. There has been some people say, hey, look, they've paid their deposit. They've got no status of their houses at the moment. I actually know a few people that work there. And again, this is just hearsay, right? At the end of the day, I've asked a question internally, and by no means anyone base your decisions on what I'm about to say. But this is not something new internally. So they've basically said that this is saying for about 12 months, they've been looking at, they've seen the price of lumber and everything go up. They've seen the supply shortage. They've seen the impacts of some of the government policies. It's only been picked up in the media, over the last month, really. I was surprised it didn't happen more after ProBuild. And some information coming out from non-Metricon people that I know, but actually work as subcontractors for Metricon, is that a lot of subcontractors are getting around them, which is a bit different to some of the commercial builders in commercial construction rather than domestic housing. Yeah. One of the big problems actually has been labour shortages around some of the actual homes getting started and getting a status. There's been a massive, reduction in the amount of apprentices availability. And so that kind of cheaper labour isn't there at the moment. And again, that's probably what that $15 billion hopefully package is focusing a little bit on construction and skills and trade skills will help alleviate, but not in the short term. We've got a skill shortage. It's as simple as that. But I think the Metricon, I'm going to put my kind of line in the sand and actually believe that Metricon will, basically kind of what I've heard, I don't think it's going to go under. But that's, again, I could be totally wrong and we're here next week.
I know they're in talks with the Andrews government, and I feel like it's in the best interest of everyone to not let a big company like that go under. So I feel like they'll work something out. And
I think they were with the Andrews government, though, more so around updates on the government projects, because they actually do some government. But I mean, inadvertently, they could be talking to them about, shoring up. I mean, they're the biggest builder in Australia. They've got 4,000 homes. They've got 2,500 direct staff, and I think it's like 20 or 40,000 kind of indirect staff. So it's
a lot of people. It's a lot of Aussies.
And at the moment, in the current climate, I think, like you said, if it needs to go to it, it'll be government support. So yeah, that's right. It's
we all love the free market until you need a bit of help. So it's like I think and the funny, I was just reflecting on it when you were saying it, that like I feel like every time you hear about the construction or the trade industry, there's always a skill shortage. There's always an apprentice shortage. Like, why is that? Just
look, it's been happening largely since 2007, 2008. A few reasons. One is 2007 to 2011. that kind of the global financial crisis really, really hit construction hard.
Yeah.
And what happened then was, people went into other jobs. And so there was kind of like a chunk of people that should be in the workforce and skilled up that weren't there. And we saw it. I saw it even more so in America, because obviously the GFC hit America more than into Australia, recession versus non-recession. And you had people that shouldn't be in a project management role and should be in a foreman role, but they're in project management because of the lack of thing. So that's one thing. The other one is, I think there's been an underinvestment in that trades is a path equal to or better, in my opinion, than going into university and college, depending on the role, right? Depending on what you want to do. But I think there's a lot of, I think there's still that mindset, and it's changing slightly, but there is still that mindset that, you go to school, you go to university, you come out, you go. Whereas like trades are looked at as kind of like, well, if you're not good enough for school, you go. There is still that mentality.
It's a perception thing. Yeah.
Perception thing. And I think until we kind of fix that perception thing and realize that a lot of my wealthiest friends are tradies, and you know that as well, Arnie.
Yeah.
Our friends. So I think it's perception, underinvestment. And I think Labor government will actually be great for this in Australia. Again, Labor government hasn't been in since 2013.
Yeah.
And I'm a swing voter, everybody. So I'm not like a traditionalist Labor person. So I'm not just spewing Labor, but I definitely think it's a good thing.
Yeah, I'm a swing voter too.
I think it's time for
a new segment.
I think you've.
Where in the world is Brad Tabone? I love that you got that.
My friend.
That's so good. So what does this segment consist of?
He just wear a stupidly expensive hat from Amazon US. Amy asked me yesterday, did I order a red hat? And I said, "Oh, the red hat's here." She was kind of
I love it.
It was kind of so everybody, if you are not old enough, she didn't know what Carmen Sandiego was, and that's my massage chair in the background that is popping in. The hat is running wild.
Running interference, mate. Maybe we'll have to bring up a picture of Carmen Sandiego.
Yes.
Let me see if I can find one. Where in the world is Carmen? Where in the world? Yeah, so go on. What are you?
Where in the world is Carmen Sandiego? And where am I? Well, it's quite interesting because I wish I could actually show you. Oh, there we are. So if you're looking right now, everybody, at that with a bit of massage chair in the top right-hand corner. Where are we? Well, we're on the that's the Arabian Peninsula there. Ooh. And what we got in green there, everybody, on the right-hand side is the Arabian Shield, and on the left-hand side we've got the Nubian Shield. So Carmen Sandiego, Brad, Arnie, what is my name?
Brad Tabone.
Bang, Brad Tabone. This is a little quick session that I'll be doing every week. I like to travel, being 63 countries, and keep knocking those ones up, and we'll continue to do so. And also a big geopolitical person, because I believe there's lots of value to be had there. And the one that I want to kind of quickly, 1 minute, sharp. In the future, will be 1 minute. This one, obviously, we've got a lot of laughing and massage chairs. I've really got to move that massage chair. But that came, everybody, on a trip back to South Korea, to America, and me and my partner were in a lounge, and we sat in a massage chair in South Korea, and they do them right there, and we got that. But anyway, divergence. I just want to get everybody and put it onto your radar. Again, I'm going to give Hori a 3 out of 3 for this one.
3 mentions.
It was funny because he said, "I think you, me, and Arnie need to invest in a mining company in the Nubian Shield." And I said, "You've been watching the Caspian Report, haven't you?" And he's like, "Guilty as charged." And so that kind of just reminded me. And for this week, boom, Nubian Shield. Everyone's probably wondering, what is the Arabian Nubian Shield? Look, it is. Let me put it out there. If you're into mining and possible value in future, have a look at the Nubian Shield. I'll be putting a link in the description below for a very Casimir Report, one of my great channels that I follow for information. Mm-hmm. It is basically one of the largest pre-Cambrian rock formations. And what is that? I think that makes up about 7 out of 8 years of the Earth's history. So it's kind of where all the mineralization occurred. It's going to become the next big mining destination It involves economies of Egypt, Ethiopia, Saudi Arabia, Sudan, and a bunch of others, about 7 different countries. Traditionally gold, so it actually was a big player in why the Middle East rose during the 7th century onwards, due to their access to raw materials. The first people to kind of get in there were the Egyptians, probably about 4,000 or 5,000 years ago, for gold deposits. It used to be just gold, but over the last kind of 5-10 years, since miners are largely Australian and Canadian and African miners, but Australian and Canadian, we love going around the world of mining.
Get in there.
Strategic metals include chromite, cobalt, copper, manganese, nickel, niobium, tantalum, and uranium. Few things, people might go over what chromite is. Chromite's crucial for superalloys that form the basis of jet turbine engines. Tantalum is vital to household electronics. Niobium is used for strengthened alloys destined for rockets and missiles. And so you're talking about these kind of resources that probably, have more application over the last 10, 20 years than ever. And these are components that are absolutely critical for them and are in short supply. And so, I'm not going to go into too much detail on, where in the world is Brad Tabone, but I like to kind of bring up interesting places to look into. There's, for instance, Megado Gold on the ASX. It's got some gold deposits throughout there.
General in nature.
General in nature. The Arabian side, which is that one, is probably the one that's going to get, I would say, commercialized faster than probably the other side, because the Saudi government has access to money. Is valued at about 1.3 trillion. So it's probably equal to nearly their oil deposits at the moment at record high prices. So to give you kind of a bit of an indication of the size of these things. But like always, I like to just point out risk, right? So risky on area. The Nubian side, risk is all about geopolitics. These are, wars going on in Ethiopia. There's always stuff going on more on that side than on this side. And that's kind of the reason why it's been underdeveloped, right? Yeah. But as it becomes more and more important to global supplies, as businesses negotiate commercial contracts and actually start mines there, it generally does stabilize at least that region, because it's kind of like a win-win for everyone, whether it's governments, dictators, whatever it be, and actual companies. So look, just
something to keep an eye on. Just something to keep an eye on.
Quick random one.
I think I love this segment. I feel like that's awesome. That's a good little clue that we can research, and a little tidbit that's whets the appetite. While you were talking, just for the tankers, there's a 2020 release of Where in the World is Carmen Sandiego, if you want to go and revisit that. But that's a great segment. I love that. And I
think I'll be going back to that one. Woof, hat off, eh? Back to my normal ego. And
that's it, mate.
That's it. So the hat is going to come out once a week.
Well,
and 50-50, Arnie.
Yeah, we're up to 50-50, mate. So I guess, have you, I haven't.
And we still managed to make this a very long podcast somehow.
Between the two of us, I feel like I just love having a chat. But I mean,
sorry, everyone.
No, it's all good.
But look, it's a format that we like. We like just general chats, and hopefully, you can put this on in your car, or when you've got like a beer after work or a coffee.
I've got a good 50-50 for you. And it's
yes, please.
I've come up with it on the fly.
There's only two of us, so it's definitely going to be 50-50. It's not going to be 30-30.
If you were forced to choose a beer, and I only give you two options.
Oh.
All right, it's 4X or Victoria Bitter.
Oh, jeez.
Which one are you choosing?
4X.
What? As a Victorian, I can't believe you chose 4X.
I feel like I'm a sacrilege.
Well, I'm obviously choosing
blasphemy.
BB, and I'm repping the state. I can't believe you've got what in the world possessed you to choose 4X?
Vomit bombs, I just can't do. I just can't do it. Never have. When our mate Timmy used to just put them away, I just looked in awe.
Timmy no beard could drink a VB.
Yeah, I mean, I have one, and I just cannot. Whereas I can have two 4Xs. I don't know. Maybe it's the heat. Maybe it's the heat up in Queensland when I'm having them.
No, I like it. Well,
but, that's where I am. Where are you, Arnie? You're VB, aren't you?
VB all day, bro. Yeah. And I guess if you want to.
Why did you choose those as the two beers?
I don't know. I thought I'd make it difficult for you.
That was difficult. But then you put VB in there, and it wasn't so difficult.
It's an easy choice. Just two bad choices for you.
Bad choices. Sorry, any tankers that love those beers. We don't mean any disrespect. Mate, lovely doing a duo with you.
Yeah, thank you. And thank you to the tankers for tuning in. And Jolly should be back next week, so we'll give you an update on that.
Fit and healthy. fit and healthy.
Money in the Tank, episode 32 in the books, and we're sticking to it once a week. So
Once a week.
thanks very much, Tankers.
Thanks,
See you
Tankers.
later.
Bye.